Thank you, Matthias. It's great to be at today's investor forum. I've spoken on previous investor forums and I'm very excited to give you an update about the hydrogen sector and First Hydrogen. Quickly, just draw your attention to the forward-looking statement here that you can read at your convenience. Now, we are First Hydrogen, and simply put, we have a mission to accelerate decarbonization, and we're holistically doing this by applying advanced technology in order to create a straightforward and compelling value proposition for our customers. Provide competitive total cost of ownership, enabling a transition from legacy carbon-emitting fleet vehicles to zero-emission fleet vehicles. So combining automotive plus energy to create a zero-emission total solution. And our holistic model is based on three key components of vehicle design, green vehicle design, green hydrogen or energy supply, and a green powertrain. We combine the three of them together to give us the lowest total cost of ownership combined with zero emission. Now, later in the presentation, I will provide updates on our company progress, but first I want to share latest news on our markets. Now, I've spoken previously about the convergence-driven megatrend for hydrogen. For context, I want to further reinforce this very important trend today. The hydrogen megatrend is here and now, and is critical for the investor community to understand it and get on board for this mega opportunity. The trend is a convergence of multiple factors that are all important in their own right. And today, these factors are combined in a convergence of needs and capabilities to create a truly rock-solid opportunity that we can seize with confidence as a result. This is why we're so passionate at First Hydrogen about what we're doing, because we know that the conditions are right to create tremendous value as well as tremendous good. We're seeing global alignment on the use of green or low-carbon hydrogen as an important contributor to fighting the negative effects of climate change. Now, that being said, not surprisingly, we're also seeing some challenges with both regional influences as well as the complexity of the overall magnitude of getting on with the task in a timely manner. I'll speak more on this shortly. On a positive note, the hydrogen megatrend reality is invigorating our industry supply chains, with scale-up occurring both in hydrogen production and application sectors, such as the mobility sector. And this is at a level we've never seen before in the industry. Our technology and value proposition are interwoven into the fabric of this megatrend, and I will now show you the exciting market developments that we're seeing. I'm showing this slide to really underscore both the level and extent of international cooperation and collaboration at the highest levels of government. Cooperation, projects, technology, and trade are progressively linking all our countries together in a common quest to fight climate change with the use of hydrogen. This is very compelling indeed, and the most recent announcement, as of September 26th, is a collaboration between the United Kingdom and Germany for hydrogen. I expect this cooperation to be further followed out with many more countries in 2024. Now, the first wave we're seeing that's happening is definitely hydrogen production, with green or low carbon intensity hydrogen being generated from electrolysis or from fossil fuels combined with carbon capture. Production is now forecast to increase some 20 times from 2021 to the end of this decade, per a recent IEA report on the hydrogen industry. Now, this is still below government pledges and even less than what is seen to be necessary to achieve a zero emission world by 2050. So great work has been done, but more is needed. The second wave is demand generation, and this is coming from multiple sectors, with activities already underway to substitute low carbon hydrogen for high carbon emitting fuels. Industry areas such as steel production and ammonia production are two such examples of what's happening here with green hydrogen supplementing these carbon emitting fuels in those applications. Very interesting to First Hydrogen is the surge in the use of fuel cells for commercial vehicles. The same IEA report I referenced is showing an all-time high for the use of fuel cell vehicles. And the leading sector within this are commercial vehicles, consisting of light commercial vehicles to heavy-duty trucks. Commercial vehicles now lead even fuel cell buses as the major consumer of hydrogen in the market. And this is really astounding given that fuel cell buses are also seeing a huge surge in growth with many recent announcements. This trend for commercial vehicles and hydrogen fully supports First Hydrogen's business plans. Well, let's look at the regions. The first is we're seeing tangible evidence of IRA traction. That's the Inflation Reduction Act, which was the historic act in the United States last year, targeting climate change as part of the act. There are over 51 billion plus investments announced in the last year in the area of electrification and renewable energy. We are entering a renewable energy super cycle, and this is where hydrogen will play an important enabling role. And green hydrogen is at the front and center as part of this, what we call the American Clean Energy Industrial Revolution. Projects tracked by the Department of Energy show activity across the country and very large growth, with projected installed base of electrolyzers growing from a base of 67 megawatts to an astounding 3,600 megawatts. More good news is expected from the US Department of Energy on their Hydrogen Hub initiative this fall. And further validation that the market is moving is being seen by big players, big companies coming into the market and making investments in manufacturing. Bosch, Cummins, Ballard, to name a few. Again, this is all part of the hydrogen megatrend and all part of the American Clean Energy Industrial Revolution. Bottom line, US market traction on large projects for hydrogen and traction on renewable energy and electrification are all driving the conversion to zero emission, and all major underpinnings for First Hydrogen's business plans. And the EU is noticing and is not to be outdone on such important industrial developments. Just look at the statements made by the European Union President in the most recent September State of the Union address, attracting more investment in clean hydrogen than the US and China combined in Europe. And the future of clean tech energy has to be made in Europe, a clear statement about regionalization. Bottom line, though, is very positive outlook for hydrogen and for our technology in the European markets. And for context, this is a previous identified projects, some 138,000 megawatts of electrolyzer projects identified, dwarfing current announced plans in the US. So yes, the EU is an extremely positive position for the mid to long term for our business. And part of that positive momentum coming out of Europe is the Hydrogen Bank, where it will deploy a contract for difference model by a public tender. A contract for difference model is where the bank will bridge fund hydrogen in order to ensure it's economically priced for the early stages of the market, which is now. The first pilot project is being tendered in November and will support the market with some 800 million euros of funding. This program only started in Q1 of this year, so very impressive progress in Europe. However, challenges still remain. And an example of that is the recent UK backtracking on earlier commitments through the delay of diesel and petrol vehicle ban until 2035 on the basis of affordability. I think the voters will have a final say on this by the look of it. So some challenges at the regional level. And in Canada, criticism is there on the pace of change. Now that the US is moving, a race is on. Canada has announced very progressive and supportive programs. It now needs to finalize the details as soon as possible. The final industry or world perspective comes from the UN, with very dramatic statements from the UN Secretary General. For all those who experienced wildfires this summer, and indeed must feel like the gates of hell are open. So what does this all mean for the industry and for First Hydrogen? Well, it's time to catch the investment wave as hydrogen is happening. Commercial vehicles are seen to be the winning mobility application combining fuel cells with hydrogen supply. And our product choice of commercial vehicles and our market choice of the European Union, the UK, and North America is spot on. And finally, we are seeing an acceleration. However, we need to do more. And with some hard work and without delay, we intend to create the market together with our industry partners. And this is creating a sustained opportunity for new investment. Now, we've also been making good progress, and I will now focus on our two major initiatives, starting with our vehicle business. 2023 has been all about our van trials, and these are really accomplishing multiple objectives. The main objective is to verify the thesis that light commercial vehicles for fleets need a fuel cell solution. And this is exactly what we're learning through real-world operating conditions and voice of the customer feedback. Range, payload, fast refueling are all seen as needed by the fleet customers. We're broadening our fleet testing to capture feedback from some of the largest fleet segments, including the important packaged goods market. We're also broadening our customer outreach with an exciting fleet demo day to be conducted at this prestigious Myra test track near Birmingham at the end of October. So that's going to be very exciting. And we've now completed very impactful trials and the first one was with Revis. And Revis is a very large fleet operator with management of over 120,000 light commercial vehicles. And of that, 85,000 are light commercial vehicles. Heavy goods and light commercial vehicles is their business. Revis has now issued an independent report on the trials, and it's all very positive. The trials were in the greater Birmingham area, Birmingham, West Midlands, and South Yorkshire, and included 3 drive cycles: urban, extra urban, which is more frequent stopping for delivery packages, and a combined cycle in order to replicate real-world driving conditions. Shown here is a trip from the Birmingham airport to the outskirts of Birmingham proper. Our telematics systems capture all the key data in order to help us verify the performance of the vehicles and inform us for our future designs. And of note is that Revis, with that 120,000 vehicles, is very experienced with electric vehicles, so is able to do a direct comparison. The bottom line is they were very pleased with the vehicle and see how fuel cell vehicles from First Hydrogen can comprehensively address day-to-day operating challenges with better range, fast refueling, and of course, zero emissions. Revis did highlight the need for more refueling infrastructure, and this is the same need that EVs face as well. And this is important to get the infrastructure in place in order to fully enable zero emission transition of our mobility sector. Fuel costs also need to be competitive with legacy fuels and electric charging, and this will be addressed through the build out of the hydrogen infrastructure and hydrogen networks. We then went north, way north to Aberdeen, Scotland, and conducted trials with SSE. SSE is a large utility with a commitment to decarbonization. And we took the vehicle and let the work crews use it. And the work crews are the ones that go out and maintain the distribution network and the transmission network for the utility. They experienced remarkable vehicle range of over 630 kilometers on a single tank, providing best-in-class zero-emission performance for this vehicle type. We've actually heard from other customers that the first hydrogen van is best-in-class in the industry, and this is great kudos for our engineering team. Now, we recently announced our interest in receiving from the parcel delivery market. And this is great news, as this is a very large market for light commercial vehicles. Parcel delivery needs are evolving post-pandemic and are also seen to be growing steadily throughout the future. So good growth prospects and also a lot of change happening. And what are those changes? The trends include the formation of micro or nano hubs. So you may actually pick up your parcels at your local mall, for instance. Fleet outsourcing, where the large companies are actually having third parties supply or use the vehicles they provide. Increasing use of large distribution centers, and I'll talk about this shortly, as well as the need for delivery speed, efficiency, and carbon footprint. All of these trends translate to the need for a solution that has a vehicle that provides greater versatility and flexibility in combination with green goals. So in terms of the overall market, it's extremely large. This source here predicts that the delivery vehicle market for vehicles will surpass 200 billion by 2032. So when we say it's a large addressable market, it's exactly that. It's a very large addressable market. Heavyweights within the industry include DHL, FedEx, UPS, major mail service providers such as the Royal Mail, as well as e-commerce companies. So again, a very large market for us to address. Now, I talked about distribution centers. And this distribution center trend is happening in the form of clusters. And shown here is a cluster actually existing near Birmingham. It's called the Magna Park Distribution Cluster. And it's close to a major urban center. It's also close to major highways. And what you're seeing is all the distribution centers are being built in one place because of that proximity to the highway network, proximity to the urban center. So with this is an ideal opportunity to serve with centralized refueling all the businesses in the park. And that centralized refueling would have the capacity to fuel hundreds of vehicles quickly and efficiently, which is possible with hydrogen, and get those vehicles on the road to do their business mission. So with this cluster trend, it's ideally positioning, again, the fuel type, hydrogen, as an enabler to zero emission with the vehicle, the first hydrogen fuel cell vehicle. So in summary, we have learned so much from our demonstration program and will continue to learn as we go forward. We've verified both our performance capabilities as well as the market need for such a vehicle. We are literally priming our customer pipeline, our order pipeline, with the experiences our customers are having and the visibility we've created through the trials. So we are on track with our overall strategy. Looking forward, we'll continue our demonstration program in 2024, and we'll initiate parallel key customer order developments with our vehicle development plans of our even more advanced follow-on designs. So let's turn our attention to the energy business with a quick refresher from where we are. First, we heard from customers such as Revis, we need to ensure infrastructure solutions are in place for the fuel. So our green hydrogen plans support fleet activities with confirmed green hydrogen supply. We will source or self-generate that capacity based on regional and local market maturity. Our product development, where we actually generate hydrogen ourselves, will target renewable-rich regions with attractive cost structures. We presently are focused on delivering projects in the 50 megawatt range, which is sufficient to fuel a fleet of 2,000 vans. So it'd be ideal for one of those distribution clusters. We have 3 to 5 sites in our pipeline under active development. Oh, sorry, I went the wrong way there. On a regional level, Europe is excellent mid to long-term opportunities to leverage the investments, the commitments, the infrastructure that's going in place. So when we look at continental Europe, it makes most sense to provide the hydrogen via partnerships with European partners. In the UK, quite frankly, is still sorting out its energy policy direction. However, we still see strong opportunities in the UK for directly coupling renewables to hydrogen production in key strategic locations. And Canada, Quebec is our lead project. And we're on track with our project feasibility study, with our first project in Quebec with Sacre Davy, and we're also on track with our follow-on site development activities. We're also developing a second site in Canada, which we'll be able to comment on later in the year or early next year. We've conducted a market survey of fleet requirements in North America, and these are consistent with our learnings from the UK market. A report on this will also be in the fourth quarter. Again, a refresher on Quebec. Why did we pick Quebec? Quebec has the vision and the strategy for an energy transition. It has a plan for a green economy. It has a plan for green hydrogen. It's supported by the government through Investment Quebec, Caisse de dépôt, and other departments of the government. It's also supported by the federal government with the new subsidy and tax programs. So why Quebec? It's a great place because there's the support, and we're so happy to be there with the support we're getting from all levels of government. And it also has tremendous green energy resources provided through Hydro-Quebec. Our location is Shawinigan, which is ideally located between the 2 major centers of Montreal and Quebec City, and is also located in what's known as the Vallée de la Transition Énergétique, which is a cluster for both hydrogen and electric technologies aimed at decarbonization. So that cluster of like-minded thinking at the university level, at the municipal level, at the city level, and at the industrial level is a great place to be, and we're so happy with that. So with that, let's summarize where we are. Our business plan is holistic in nature, really to simplify market adoption of our product, our fuel cell electric vans. We have a flexible approach intending to provide hydrogen as a service, so the green hydrogen with the green vehicle to enable that total cost of ownership performance and to enable decarbonization. We think this strategy helps address large markets, also helps de-risk the customer side of the business, and creates fueling optionality for the customers over what they have today. Our markets, as we've seen, are clearly accelerating, and there are large, long-term sustainable markets available, such as the packaged goods delivery market. We've made exciting progress both on our vehicle side and our energy fronts, the fleet trials and our Shawinigan projects. And overall, our zero-emission marketplace has potential for billions of dollars in sales, serving our key European, UK, and North American markets with a total solution for attractive returns. With that, I'd like to turn it back to Matthias. Thanks for your attention.